Fast fact. Over the past 20 years, the average cost of a 4-year college degree has more than doubled, with tuition inflation outpacing regular economic inflation by 41%. I'm Drew Thomas, and this is Bank Chats. So let's set up the topic for today.
Okay.
And I have no creative way of doing so.
Okay. So the school season has just ended. So we are going into the summer, and kids are thinking about, how am I going to pay for college? Or parents are thinking about, how am I going to pay for my kids' college?
Yeah. Been there, done that. Bought 2 t-shirts, one for myself and one for my daughters.
Yeah, my family was half and half. Me and my mom went to the same school, and my dad and my sister went to the same school. So we had some rivalry, but
okay.
You know.
You mean college?
College, yeah.
Okay.
Yeah.
So do you have one of those flags out front that has like the, house divided? Have you seen those?
Yeah, I have seen
those.
There's
The different colleges. Yeah, that's kind of cool.
No,
Yeah.
but...
So we have a special guest with us today that is going to help us work through some of this stuff, because honestly, finding good opportunities for lending and good opportunities for financing as a student is not always the easiest thing in the world.
Yeah, and there's a lot of options out there. So which one do you pick? Yeah.
Right. So what do you do? So we have Leon it's Gagliardo, right?
Correct.
Okay. So Leon Gagliardo, he's an assistant vice president with the PA Forward and Keystone Student Loans. And how are you doing, Leon?
Good. Happy to be here.
That's great. Yeah, we're really thrilled to have you here. Honestly, this is fantastic, and we're doing this obviously virtually, as you can tell. Jeff and I have our typical studio backgrounds, and Leon is on his background here. But that's
he's in the same state, but yeah,
same state,
yes.
Different county. Yeah.
Yeah.
Where are you right now, Leon? Let me ask you that.
I'm actually in Carlisle, Pennsylvania.
Okay.
Carlisle. Okay, so that's not that far away. That's like 2.5 hours from us, something like that.
Yeah.
Something like. Have you been to Johnstown?
I have. Yeah.
What did you think?
Be honest.
Yeah.
Am I going to get dropped from the podcast?
No, you probably can't say anything that we don't say around here. So
it's a nice town for sure.
It is a nice town. It's very scenic. There's a lot of history around here. So you're welcome anytime you like, but through the miracle of technology, we're still able to do this today, which is fantastic.
Sure.
Yeah. So Jeff, why don't you go ahead and start, and let's just start a little bit with I guess
let's start broad.
Yeah, let's start broad. So
Okay.
let's start with, how does student loans work? Like what are you looking for as a student when you're looking for a student loan?
Yeah, so basically at a very high level, I mean, a student loan is used to finance, post-secondary education, so whether that's a college, whether that's, technical school, proprietary school, any kind of post-secondary institution. So those funds can be used for tuition, room and board, any kind of expenses related to education. There's basically 2 types of, broadly speaking, student loans. There's federal loans. So you might hear about the Stafford loan is probably the most common, the Parent Plus loan. Those are all kind of issued by the Department of Education.
Okay.
And then you have private student loans. So what we do is we always encourage families to look at federal funds first, if there's a gap. So look at the Stafford loan first, and if there's a remaining balance, then you can look at private student loans.
Okay, so
generally just because that's a different rate, or what would be the benefit to look at federal before private?
There are different benefits on the federal side. They tend to be, their interest rates are good. If you could also qualify for a subsidized federal loan, which basically means that the government is paying for the interest while the student's attending school.
Okay.
Okay.
So basically the first step, before you even start looking into any of this, is to complete the FAFSA, which is the free application for student aid.
Free application for federal student aid, right? Gotcha.
Yeah.
I filled out many in my life.
Right. Yeah.
So the FAFSA gives you access not only to potentially federal loans like the Stafford loan and so forth, but also potentially gives you access to grants and so forth too, right?
Correct. Yeah, that's why it's so vital to complete that. Because and before you even look at federal loans, there's grants available. So for example, there's FAFSA administers the Pennsylvania grant, which is available for Pennsylvania families.
That's usually income based too, or what other factors usually go into determining whether you qualify for a grant or not?
Yeah, it's primarily income based. There's some other factors. I mean, there's questions on, it's the FAFSA is based on the tax returns, for the family. And then in addition to after you do the FAFSA, there is a Pennsylvania, there's a FAFSA grant application that can be completed, and that can be done through the FAFSA website. So,
okay.
And we work with, FAFSA. So we get data from FAFSA that kind of allows us to get a lot of the information that we need to make that determination, whether they would qualify for a loan or a grant.
Okay, so so you mentioned FAFSA. So let's talk about that. Like what exactly is FAFSA?
Yeah, it's a great question. So FAFSA stands for Pennsylvania Higher Education Assistance Agency. And basically our mission is really to provide affordable access to higher education. We do that through a variety of ways. One is we contribute to the Pennsylvania State Grant Program. Two, we assist families with navigating through the financial aid process. We know that it's not an easy process. So we have websites that families can utilize. There's an education planner, My Smart Borrowing. You can deal with it. Those are all websites that we kind of maintain as a service to students and families. We also provide low cost financial solutions, so PA Forward Student Loan Program and our Keystone Student Loan Program are two of those solutions that we do provide. And then we also look to educate students on financial literacy. FAFSA is a state agency, but we're somewhat unique in that, we have different revenue sources. We have a servicing platform where we service loans for other lenders. And then there's other lines of business that help support our mission. So any additional revenue that we have goes into the Pennsylvania State Grant Program. So the goal is to be self-sufficient, and generate these lines of revenue. And then that money ideally goes back into supporting Pennsylvania students and families.
It's like a revolving door. Yeah, that's cool.
Right.
Yeah, I mean, definitely. So you said that there's a couple of different options on loans, and we can kind of get into the differences here, I think, in a minute about the differences between, say, the PA Forward and the Keystone loan options and so forth. But before we do that, about how many students in Pennsylvania are taking advantage of these kinds of loans? I mean, is it pretty common that I would assume it's pretty common to need lending assistance when you're going to college, right? I mean, not everybody is independently wealthy or has parents that are willing to foot the entire bill.
Yeah. There are certainly a lot of families that take advantage of private student lending. Just to give you an idea, PA Forward launched in 2019. Since 2019, we've originated about 840 million in student loans.
Wow.
Yeah, and that equates to about 30,000 families. One of the things one of the things we're really proud about is, because we are a not-for-profit agency, our goal is to provide those loans at a really low cost. So the average interest rate just for our portfolio right now is about 6.7%. When you look at other private lenders, the national lenders, they tend to be, closer to 10 or 11%. So it's a pretty
Wow.
significant savings that we're able to pass along to families.
Now,
Is
is
that
those interest rates, is that fixed, or does that vary from year to year for the student?
Yeah, so we originate just fixed loans.
Okay.
We view that as a good thing because once the rate is set, that their payment's not going to change over the life of the loan. There are variable rate loans, that other lenders provide, but those rates can fluctuate. So if you're in a good interest rate environment, that rate could be a little bit lower, but then once the interest rate environment changes, it's typically based on an index. Their payments could go up on a quarterly basis, so those could kind of get reset, as interest rates are rising.
Sure.
Yeah, I remember the good old days of low interest rates. I don't know how quickly those are going to come back around. Not that it has anything to do with specifically with student loans, but even home equity rates and things like that. The days of the pandemic when you were getting house rates at 2.5% or 3%, and there are a lot of people that still believe that they're going to hold out and wait to buy until those rates come back. I don't think that's ever coming back. I think, right now, when you take out a mortgage, you're probably between 5.5% and 7% or so. So, I mean, really, 6.5, would you say 6.7%? Is that what you said?
That's our average, yeah.
On average.
Yeah.
So really, I mean, that's really not bad, especially when you start comparing that to taking out a loan, even a personal loan, which is probably going to be higher than that, or assuming you could even get a personal loan for the amount that you would need for some schools, or even taking out like a home equity loan if you're a parent or a guardian trying to help your student through, through school. I don't think you're going to find a better rate than that, in general. So.
Right.
So what is the difference between, you said since PA Forward started in 2019? Is that what you said?
Yes, in 2019.
So, okay. So what's the difference between PA Forward and Keystone? I know that there are two different sort of categories of loan there.
Sure. Yeah, that's a great question. So in 2019, we launched PA Forward. That was really focused on Pennsylvania students and families. So for PA Forward, if you're connected to Pennsylvania, you would get a PA Forward loan. So when I say connected, either you're a Pennsylvania resident attending a school anywhere within the country, or you're in one of the surrounding states, let's say New York or New Jersey, attending a Pennsylvania school, then you would qualify for a PA Forward loan. One of the reasons that we had that requirement is we worked with the Department of Economic Development at the state level. And when we talked about developing this student loan program, they gave us a tax exempt allocation, so we can do a tax exempt bond, that would actually keep those costs lower, for students and families, as long as they're tied to Pennsylvania.
Okay.
A few years later, we had a lot of success with the program, but we felt like we really wanted to, as a nonprofit, still kind of expand our reach to families that are outside of Pennsylvania. So we looked at kind of the neighboring states, New York, New Jersey, Ohio, Maryland, Delaware, West Virginia, and then Virginia. And we wanted to offer a competitive program in those states as well. So we developed the brand Keystone Student Loans. The rates are a little bit different. They're slightly higher because we can't use that tax exempt allocation the same way we do for Pennsylvania students. So the rates are a little bit higher. So we established a different brand. And then we also felt like going outside of Pennsylvania, PA Forward may not resonate with students and families outside of the state. So we came up with a new brand.
Yeah, that totally makes sense to me.
We're in Pennsylvania, but our listeners are not all from Pennsylvania. We hope so.
Yeah, we assume.
Are there other organizations like FEA in other states that are doing this? Do you know?
There are.
Okay.
Yeah, just a couple examples. I mean, MIFA is a state-based entity that's out of the state of Maine or Massachusetts rather. Indiana has a program that's kind of specialized for Indiana students, so similar to FEA. Alaska has an organization. There's a few others. South Carolina does, but in our kind of immediate area, FEA is somewhat unique. New Jersey does. New Jersey has a program as well. I mean, they have a state program.
So regardless, so again, just to make sure that we're clear on this, or that I'm clear on this, I guess I should say, is that even if obviously if I'm a Pennsylvania resident and I'm applying to go to a Pennsylvania school, I qualify. If I am a resident of, or not necessarily qualify, I can apply. I can apply.
Yeah.
Right.
If I am a resident of one of the surrounding states that FEA works with, and I'm attending a Pennsylvania school, I can apply. Is that right?
That's right.
Or
That's right.
okay, but if I'm a Pennsylvania resident attending a school outside of Pennsylvania, can I apply?
Yes.
Okay. So the only way that I cannot apply really is if I'm a resident of one of these other states and I'm attending a school outside of PA. Is that fair?
Actually, it would be, so if you're let's just use Massachusetts. If you're a Massachusetts resident, you would not be able to qualify for one of our programs because you're outside of the 8 states that we cover. So we have
for PA.
Versus Keystone. Yeah.
Okay. So even if I'm a New Jersey resident attending a New Jersey school, theoretically, I can apply.
Yes, that would fall under the Keystone student loan program.
Okay, so that's cool.
The good news is the application. It's the same application for both programs. What we do is we ask those kind of questions up front. Are you a Pennsylvania resident? If you're not, it goes to the next question. Are you attending a school in Pennsylvania? No. Or are you a New York resident attending a New York school? Yes. Okay, now you're going to go to the Keystone application. I know it's a little confusing, but for the customer, it's pretty straightforward.
It's easier. You're doing all the sorting. Yeah.
Right.
Yeah, exactly. Right.
Yeah.
So but I think that's an important distinction, and I'm glad I asked, because I want, it's important that if somebody's watching or listening to this and they think, you don't want people to say like, oh, well, I'm a New York resident and I'm attending a New York school, so I don't need to listen to the rest of this because it doesn't apply to me. Actually, it could.
Right.
So that's really awesome. I think that now if I apply, you said there are programs in other states. Now they don't ever overlap though, is what I'm probably hearing, right? So if I'm in Maine or Indiana, though you don't overlap on any states where I can apply to one and the other. Does that make sense?
New Jersey might have.
That's true. New Jersey might. Yeah.
So you have
New
options
Jersey
in those states.
Yeah, if you were a New Jersey resident, there is the New Jersey program that you should probably look at first. But other than, I mean, there's also there's grants and there's loans. We have other organizations out there that have grants. That if you're a resident of those states, and you should look at the grant first, that you wouldn't, there wouldn't be an overlap. But in general, I mean, a lot of the other state-based entities, are focused on their particular state.
Okay.
And we didn't mention this when we first mentioned grants. The difference between grant and loan. Grant is basically free money to you, right? Well, there's no repayment.
Exactly right.
Okay.
Yeah.
So you want those first.
You want those first. Yeah.
I know
we mentioned that you want to go for those first, but we didn't mention why.
Yeah.
Yeah, that's your first line of attack for sure.
Okay.
You want to see if you qualify for a grant. I know we talked about how many families kind of were impacted by, our student loan program. We didn't really touch upon our grant program. So just to give you an idea, we administer the Pennsylvania State Grant Program for the Commonwealth. That's our largest grant program that we offer. And we actually, there's an appropriation of about 400 million, for 2024-25, we dispersed about 400 million, which equates to over 100,000 families that we were able to help through the grant program.
Wow.
So it's a really big number, and it affects a lot of families throughout the state of Pennsylvania. Yeah, and in addition to that, there's some other grant programs that we administer for the Commonwealth. That's the largest, but there's also grants for military, there's grants for nurses, there's a Grow PA grant program that's recent, that we rolled out. So if people that agree to work in Pennsylvania, they could qualify for a grant to go to school. There's also a teacher grant program. So one of the things that we're trying to help is teachers that are going through this, teachers that are student teaching, how can we support them? So can we give them a grant, as a student teacher?
That's big right now because, I mean, Pennsylvania's hurting for teachers in certain areas, definitely.
Yeah.
Yeah.
What about I honestly don't know the answer to this, so I apologize if I'm stepping on something that is a landmine of sorts.
Okay.
But what about like trade programs? Things like, do you do anything? Are there any kind of grants or loans that you guys work with for schools that teach more traditional trades rather than universities and colleges?
Yeah, that's a good question. I know there's a variety of programs that we administer. I'm certainly not an expert on the grant side, but there is a targeted industry program that we have out there. So there, industries that are kind of in need, and there are grants that, students can qualify for.
Okay.
Yeah. And what I would recommend to listeners, I mean, FEAA.org, where's our website? So there's a whole list of, grants that are out there that they can look at and see what they may qualify for.
Now, do you have to apply for those annually, or once you receive grant money, you receive grant money for your entire, college or university stay?
Yeah, that's a great question. So typically, like for the main grant program, you're going to apply that first year. And then typically, we have your information and we actually get a feed from the Department of Ed, the FAFSA data each year. So we're able to kind of see, okay, all things are remaining equal. We'll give you the grant for the second year, third year, et cetera. So typically, you apply once, and you create your own username and password, and then you can kind of go in and see the status for the next year if you qualify.
Okay.
But you do have to still fill out the FAFSA every year, correct?
Yes.
That's still an annual thing that you have to do.
That is. Yeah, that's critical that you do that every year.
Okay. So what's the application process like? What does a typical application look like if I'm a student or a parent that wants to do this?
Yeah. On the
I mean, after I filled out the FAFSA, what would I do for PHEAA, for example? What would be my next step?
Yeah, so after you complete the FAFSA, then you could go to the PHEAA.org, and there's a grant application out there. The good thing is because we have a feed with, that we get FAFSA data, there's not a ton of information that you need to supply, because we're going to get a lot of information systematically anyway. So it's basic demographic information, your name, where you're going to school, those kind of questions. So it's not a overbearing process in any sense.
Okay. But there is a process, though, I guess is my thing. It's not like, oh, I filled out the FAFSA, so if I qualified for a PHEAA grant or a PHEAA loan, I would automatically know. I still do have to do something with you to start that process.
Sorry, go ahead.
Yeah, it's a separate application on our side.
Now, if you were denied a grant or a loan for whatever reason for 1 year, are you automatically denied for the remainder of your schooling, or is that something you want to apply for annually as well?
Yeah, no, that's not necessarily true. I mean,
Okay.
your financial situation could change, so I don't think that happens a lot, but I mean,
Okay.
it could happen.
Okay, so let's assume that I apply. Let's assume that, I've gotten all my paperwork in. What kind of a deadline are we looking at? Am I applying?
Yeah.
Am I applying, 9 months in advance, a year in advance? How long? How,
Yeah.
like, if I'm going to school this fall, for example, when should I have done my application
Because you
for all
have
this?
to first, and that
Because you have
takes
to
some
FAFSA
time.
first. Yeah. So really, like, if I think that a lot of people, I know this was difficult for me whenever I was a high schooler. Sort of getting students to think ahead at that age is always a little bit difficult.
That far
That I should be thinking about applying for these things when I'm a junior per se, maybe not so much a senior, right? So
Right.
what kind of timeframes are you looking at for application deadlines?
Yeah, so basically the FAFSA opens up, and I'll say typically because over the last couple of years there's been kind of some changes, but the normal cycle now is October 1st is the earliest that you can submit your FAFSA. And so we, for the grant application, we kind of mirror that cycle. So October, as early as October for the next academic year. So that's early, right? So you're it's like 10 months before you're going to go to school. And then you have until May 1st is typically the deadline, for our grant program. And then shortly thereafter, May is when they'd be notified if they qualify for the grant.
Now, here's a question that I don't know. A lot of people would. I don't know. Maybe people would ask. Maybe they wouldn't. I don't know. But is there an advantage to applying early to these things, or is it really one of those things where you guys are collecting all the applications and then you're not decisioning anything until the deadline? Because I know there are a lot of procrastinating students out there, and so you got to wonder, like, does applying early have a benefit?
That's a good question for grants too.
Yeah.
Does grant money dry up if you wait till
Yeah,
the very
right,
end?
right. Yeah.
That is a great question. I mean, I would say in general, it's better to apply early, because there are certain programs, that the Commonwealth allocates a certain amount of funding for us. So some of these kind of specialty programs, so for example, maybe the teacher program, there's a limited number of funds. So we can't say, hey, we're going to choose this person over that person if they kind of or a similar financial situation. So if there's a limited funding, then it's important that you apply early, because it could be a first come first served situation.
Okay.
When you're talking on a broader level like the FAFSA, that's not necessarily the same case. Yeah, that's a kind of a tough question. I think it's usually better to apply. I'm not going to say for sure, like it always matters, whether you do it
Best
October
practice,
1st or
Yeah. Well, I think that's honestly, it's probably a good best practice just in most things in life to not wait until the absolute deadline, But I know there are definitely people out there that do that. They look at a deadline on the website and they think to themselves, oh, I have until May 1st. I don't have to worry about that until April 29th,
But
maybe
when you're
that's
dealing
not
with that much money, I don't know how people would procrastinate, but yeah.
You haven't met apps.
Okay, fair.
And I'm going to remind you of this in about 17 years.
Yeah,
is what I'm going to
yes,
or so.
I'm a new father, Leon. Yeah.
So
might be hitting up FAFSA in 17 years.
Yeah.
But 529 plan is your first step, right?
529 plan. Yep.
Okay, so let's talk about the downside to some of this, right? So I let's assume that, you know, I've gotten through school, I've gotten my loans, I've worked with everybody, I've gotten my grants, whatever, and my loans come due. What does a repayment look like whenever you graduate? Is there some sort of a grace period after you graduate where you get an opportunity to maybe like get a job and get your feet under you first before you have to start repaying the loans? Or
and to piggyback off of that too, no. Can you start repaying your loans ahead of time before you graduate from college? Is that beneficial?
That's advantageous if you can do it.
If you can't do it, yes,
Yeah.
yes. Is there a benefit to doing that? Do you save any money?
For sure. Yeah. Yeah. So let me take a step back and I'll talk about the application process, because depending on what option you choose is going to kind of dictate what your repayment schedule looks like. So for the PA Forward and Keystone student loan program, we offer 4 repayment options. So it kind of goes immediate repay, which is you're agreeing to make payments while the student's in school, right? So you're gonna, once the loan gets dispersed to the school, within 30 to 60 days, you're going to start making monthly payments to the school, or monthly payments to us.
To you, yeah.
Yeah. So the benefit to
not you specifically, like Leon isn't collecting the checks, but
no. Good clarification. No.
Yeah.
Yeah. So the advantage of doing that is, for our loans, we would give you a better interest rate for doing that. So if you're agreeing to make those payments immediately, then we're going to drop your interest rate a little bit. Now, the next option you can choose is what we call an interest only. So that's kind of like the next best option. That means that you're going to, whatever the interest is, that's accruing each month, you're going to make that payment. So that could be, $100 a month, $75 a month, whatever the case may be. And that will give you kind of the second best interest rate. And then there's what we have is kind of like an in-between. There's a partial interest rate, which is $25 a month. So you're saying, hey, I can pay a little bit while the student's in school. I'm going to just agree to pay $25. So that rate would be a little bit lower. The most common is typically the full deferral. So that means that you're not agreeing to make any payments until the student graduates. And then talking about grace period, there is typically a 6-month grace period for our programs. So you wouldn't have to make those payments until the student graduates, or if they withdraw from school, they'd be expected to make those payments sooner. So it really depends on what option they choose. But regardless of what option you choose, you can always accelerate payments. You can always send us money early. There's no prepayment penalty. That's just going to pay down, the principal earlier, so that you wouldn't have to, go the full term. So there's different terms too. There's, on the private side, there's a little bit more flexibility. Federal loans are in general, they're 10-year terms. With private, you can choose a lower term, like a 5-year term. There's also a 10-year term, a 15-year term. Some of the loan programs go up to 20. And then that's another consideration when you're doing the application. If you choose a 5-year term, that's going to get you the best interest rate within that term, because you're paying it off sooner. So we'll give you a lower interest rate for that. So between the repayment option and the repayment term, that kind of can determine your final interest rate.
Yeah, and I mean that makes sense. I think that's true of most lending. The longer that the lender is on the hook for that money, the longer it takes for the lender to get paid back, the higher they tend to make the interest rate, because there's more risk.
Yeah,
right.
Sure.
There's risk of default and all that kind of stuff, which
that brings up another question. What happens? We've talked about other loans on this show. I mean, you lose your job, or your parents lose their job,
Sure.
What happens if you are unable to make a payment for a month or n number of months? What are the consequences? Is there a grace period?
Yeah, so there is, Yeah, there's certainly a grace period. I mean, if you miss a monthly payment or two, or even three or four, we're not gonna default the loan. We're certainly gonna be reaching out, to the borrower to see, if we can get payment from them. And if we can't, they have a hardship situation, we do have options for them. So we always try to work with the borrower. So there's a financial hardship option where, we can pause payments for up to a year, for example. There's kind of an alternative repayment plan where we can maybe reduce the payment for a period of time. So we're always trying to make sure that we're working with the student to make sure that we're accommodating, but we're still kind of not letting them kick the can down the street so much where it's kind of snowballing. We try to stay on top of it.
Yeah.
To make sure that they don't put themselves in a bad situation.
Yeah, I think that's it. I mean, that's an important thing that I think, and I know I've said this on this program before. I've said it in my personal life before that a lot of times younger students, in some ways, depending on, whether you're going to a state school, a private school, a community college, or an Ivy League university, there are vastly different costs potentially involved in that, right? But in some cases, you've got 17, 18, 19-year-old students signing on the dotted line for a loan that is equivalent to buying a house,
Right.
With far less upfront knowledge as to what kind of repayment options that student is likely to have, compared to whenever you buy a house, right? So, and some of these students, they go to school with all the best intentions, but they end up graduating with a degree that is not necessarily conducive to repaying an Ivy League level loan, right? If I went to Harvard and I graduated with a philosophy degree, I better be really, really good at thinking deep thoughts,
Sure.
Or I'm not going to be able to repay these loans, right? So, it's I guess my point is that it's important for students to understand that these loans they have to be repaid. It's not a matter of, which again goes back to the whole grant thing, scholarships. If you can get grants, if you can get scholarships, do that first. But the reality is that not everybody gets to go to school for free,
Sure.
And when you're taking out a loan, it sounds great up front because, hey, like I think you said, your most common plan is no repayment whatsoever until after you graduate. Right. So, they get 4 years potentially of feeling like, oh, I have all this money rolling in and I never have to pay a dime, but you will have to repay that eventually.
Do you require a cosigner for any of your loans?
It's not required, but we have a lot of cosign loans because, typically a student, they're 17, 18 years old. They, these are underwritten loans. So they're, we are looking at a credit score and their kind of debt to income. And there's other factors that go into the underwriting process. But we usually encourage a cosigner because, as a student, you don't really have a credit score or it's a light credit score. So most of our loans on the undergraduate side are co-signed. Once we get to graduate loan programs or medical programs, then we don't see as many co-signed loans. But the reality is, typically mom, dad, grandma, grandpa, it helps to have them co-signed to get them approved. I think, when we developed this program, I mean, the goal was to help people borrow responsibly, right? So, we didn't want to make it where the underwriting is so loose that, people are taking out more than they can afford to pay back, so it's that balancing act of just making sure that we're promoting responsible borrowing.
Yeah, that totally makes sense. Just for since you brought up the idea of like the cosigner, like so if mom or dad sign to cosign a loan and Billy, we're going to use hypothetical Billy because Billy's always in trouble, just like Johnny. if if Billy decides that he's not going to make his payments, are the parents then going to be approached and say, "Hey, listen, you co-signed. This is actually your responsibility to repay this if Billy doesn't." Is that true?
Yeah, that is true. Yeah, I mean, technically, they're both responsible for the loan. So we're going to be, reaching out to the cosigner as well in those situations.
Do you guys typically reach out to both the student and the cosigner at the same time, or do you go for the student first and then sort of go to the cosigner only if the student doesn't respond? How does that kind of thing work? Because I know, like, with some loans, like, if the student doesn't respond, like, and again, some of these younger people, they're not always opening their mail, they're not always opening their email,
Answering a phone call. Yeah.
answering a phone call is a big deal. Like, if so how does that typically work? Do you reach out to both?
Yeah, and there's different strategies that we deploy, because we're always looking at, what's the most effective way to reach people at what time and what frequency. So that's always kind of a work in progress. But in general, I mean, we're going to reach out to the borrower first, and then shortly thereafter, if we're not getting a response, we would reach out to the cosigner.
Okay, that makes sense. All right, so I think I've kind of gotten to the end of the questions that I had pre-written down, but we've obviously asked a few in the middle there too. But is there anything that you can think of, Leon, that we didn't cover that you definitely want to make sure that people know about when it comes to FAFSA and the programs that you have?
Yeah. No, I think there's a lot of great resources out there, on FAFSA.org. One of the things that we're excited about that we launched, I think it's maybe a year and a half ago. We have a scholarship program. So for PA Forward and Keystone, we have a $2,500 scholarship that students can apply for. So they can, that period is not open just yet. I mean, but they can, when they're getting ready to go to school, they can apply for the scholarship. And there's what we like to promote it as, it's a no essay. A lot of scholarships require writing essays. This one is basically a random drawing, so they can just, apply for those. So that's another way to try to help you get through school.
So there's no excuse to not try that one, right?
Yeah.
Correct. Yes. Yeah, and we're doing a lot of financial education too. So on our website, we have webinars on different topics. How to apply for scholarships, how to complete the FAFSA. There's lots of great things that we're doing throughout the state of Pennsylvania. To try to promote financial education and literacy.
That, I think that's a big deal, because we read all the time about how particularly younger people are, I don't want to say complaining. Complaining is a bad word, but sort of saying that they just don't receive a lot of financial education. They don't. We talk about it all the time on the program. Like, people go through high school, they go even through college in some ways, and they go through all sorts of math and other kinds of classes, but they don't get a basic on how to manage your household budget, or how to you make sure what things you need to learn how to pay off, and how interest works,
how taxes work, how anything works. Like,
right. The things that all of us have to deal with for the most part, unless we're independently wealthy and have a trust fund handling it for us. We all have to pay our taxes. We all have to do those things, and yet we don't always talk about them. So financial education literacy is a big deal, and it's good to know that you're focused on that as well.
Yeah. And one thing I'll say too is, we're partners with AmeriServ. I mean, basically, we're competing against other private lenders, and these other private lenders are national lenders, and they have, large marketing budgets, advertising budgets. They have their name on the side of a stadium. We don't have that luxury, and we're not for profit, so we don't have a lot of ways to market our program other than, word of mouth, working with schools, partnering with, AmeriServ is another example. I mean, you can get to our programs through your website. So we appreciate, you working with us and helping us get the word out, because we are, not for profit, and we don't have that huge marketing budget. And if we did, it would affect our interest rates. So our goal is keeping the rates as low as possible.
Yeah, I was just about to say, if you did have your name on the side of a stadium, I bet your interest rate average would be higher. So, and that's an important thing too, because I think a lot of people make decisions about lots of things that they do in life and buy in life based on brand.
Yeah.
They've heard of this, they've heard of them, and so they automatically go to, and I'm not going to call anybody out, but they automatically go to certain organizations because they're well known, but that doesn't necessarily always make them the best choice in terms of their financial well-being, if that makes any sense. I mean, if they can go to school and the money comes from FAFSA, the school's going to accept that money just as easily as if they accept it from some other organization. But if the student ends up paying 1 or 2% less in interest, that's a big deal over a course of a 5 or 10 year loan.
Oh yeah,
Sure.
So obviously, we're doing this, we're putting this out in June, summertime. So a lot of the deadlines for this upcoming year are most likely passed at this point for the 26-27 school year, right? But if you're a junior in high school, or even if you're in college and you're, maybe your first year or so, your mom and dad helped you out, you didn't really need so much, but now you're thinking, maybe next year I'm going to need some loans. Some of this stuff is going to start opening up again here in a couple months, right? Is that fair?
Yeah, I mean the student loan peak season is pretty much in June, July, and August. So that's our busiest time of the year. About 60% of our applications throughout the entire year are kind of in a 2-month time frame. So basically, once students start getting their tuition bill, that's when we start seeing the kind of influx of applications for student loans. But you're right, the grants and those kind of things, that is kind of past typically the May 1st time frame.
Okay. So that's an important distinction. But you can still theoretically, if you get your tuition bill, you could still apply for a loan pretty much anytime, is what you're saying.
Absolutely. Yeah.
Okay. So yeah, definitely an important distinction.
Was the specific times and dates and stuff.
Yeah. Well, Jeff, you got to drill things through my head.
No, there's too many. Yeah, there's too many steps. Yeah.
Yeah, this stuff I'll tell you, I've worked for FAFSA for about 12 years, but until you go through it, with your own son or daughter, it kind of all comes together when you have to go through it firsthand. And so this is not easy stuff. There's a lot of steps, a lot of things to consider, and that's why, FAFSA, that's why our mission is to try to educate people and let them know what their options are and provide those resources.
Yeah, totally. So we will definitely put, since you were kind enough to mention that we do partner, AmeriServ does partner with FAFSA, we'll put the link to to our page in the description. But we'll also put links to FAFSA.org and is it org or edu?
It's org.
Probably org. Yeah, I thought it was org. So and any other if you have any other links or anything you'd like to make sure we share, we can definitely put those in the description as well, to make sure that people can reach them if they're listening to the show or watching the show and just want to click the link in the description below. We can handle that. Leon, thank you very much for your time today. It's been a pleasure talking with you, and I think there's been a lot of really good information passed on here that hopefully people can take advantage of.
Yeah, thanks so much for having me. I really enjoyed the time today.
Yeah, and you're welcome back anytime. We can do this every year if you want to.
Yeah. If you get new programs, we'd love to update everybody. Yeah,
absolutely.
That'd be great.
All right. Hey, thanks. Take care.
Leon.
Thanks.
This podcast focuses on having valuable conversations on various topics related to banking and financial health. The podcast is grounded in having open conversations with professionals and experts with the goal of helping to take some of the mystery out of financial and related topics, as learning about financial products and services can help you make more informed financial decisions. Please keep in mind that the information contained within this podcast and any resources available for download from our website or other resources relating to Bank Chats is not intended and should not be understood or interpreted to be financial advice. The hosts, guests, and production staff of Bank Chats expressly recommend that you seek advice from a trusted financial professional before making financial decisions. The hosts of Bank Chats are not attorneys, accountants, or financial advisors, and the program is simply intended as one source of information. The podcast is not a substitute for a financial professional who is aware of the facts and circumstances of your individual situation.
In 2026, students attending a 4-year in-state public school can expect to pay approximately $24,000 per academic year when factoring in tuition, mandatory fees, room, board, books, transportation, and daily expenses. For a private school, that cost can balloon to over $60,000 per academic year, or nearly $250,000 for a 4-year degree. When seeking a post-secondary education, students should legitimately consider the debt they may incur before automatically going off to college and graduating with a degree that may not necessarily help them repay the loan. Moreover, nearly 1/3 of students who enroll in college fail to graduate at all within 6 years. But loans taken out for their education still need to be repaid. This is why organizations like FAFSA focus not only on providing loans, but also on helping students seek out grants and work-study programs, along with providing them with vital financial education opportunities. AmeriServ Presents Bank Chats is produced and distributed by AmeriServ Financial Incorporated. Music by Schneckmind. Executive produced and co-hosted by Jeff Matevish. You can now subscribe to the podcast on YouTube or on your favorite podcast app. For now, I'm Drew Thomas. So long.